There we
Okay,
are.
we are live. All right. So I'm going to give everyone a couple minutes to hop on. But
Okay,
I'll
okay.
quickly let you, Crystal, if you want to introduce yourself and kind of what you
Yes,
do.
absolutely. So, my name is Crystal Wilson. I am an insurance broker here in Omaha, Nebraska. I own and operate Goosehead Insurance, which is an independent franchise that I actually pioneered here in Omaha, Nebraska. I write between two states right now, Nebraska and Iowa. And as a broker, we have so many different things that we can do.
Yes. So I have to share, I didn't even tell Crystal this when I invited her to do this today. But I love women who just get out there and do the hard work and hustle and get on social media and make stuff happen. I swear a lot, sorry, but make stuff happen. And Crystal has done a really good job of that on social media. So she's another powerhouse female
Thank
that's out
you.
there crushing her business. And I thought it'd be awesome as today what we're doing is we're going to be sharing a little bit about how to shop for insurance as a first-time homebuyer and what you're actually looking for and understanding the policy as well as the deductibles and all the stuff that goes into shopping for insurance. A lot of times our first-time homebuyers, and I'm Jamie Flanagan, by the way, if you don't know me, we're watching here on my channel, but I'm the team lead for Big Picture Real Estate Group, and we operate, we do real estate in Omaha, Nebraska, and the surrounding areas, as well as the foothills of Colorado, and then Phoenix, Arizona. So we are going to be talking about insurance specific to Nebraska and Iowa today, since that's Crystal's forte. But first-time home buyers. So one of the biggest things as a first-time home buyer, a lot of times they haven't shopped for their own insurance before. They've been on their parents', insurance or car insurance, or they're still on their parents' car insurance, so they haven't even had that experience. Is what I'm finding out from the first-time home buyers I'm working with, which is really, really neat because I think it's powerful for to be in a position to be able to buy a home when your life experience is that limited is pretty awesome. So these people have really set themselves up for success by putting themselves in a position where they can home shop. In their early 20s, it's pretty powerful, and I think it's really awesome, especially as we talk about like building wealth on a regular basis. Starting early, you fast track yourself on the
Yeah.
wealth building
Catapult.
scale. So I think it's really
Yeah.
powerful. So I've had this conversation a few times this week, and I was like, all right, Crystal, let's get on a call and let's record this so that I can have our first time home buyers be able to review this information on a regular basis, and they can watch it over and over again until they understand it.
Yeah.
So first question I have is, when somebody is shopping, what does that even look like? What's like the first step? Or, I just started, I went out and looked at homes with my real estate agent, and now I'm in contract. We wrote an offer, it got accepted. And then my lender told me I needed to have an insurance policy. And I was like, wait, what? I don't really know what I'm supposed to do here. So what does
Yeah.
that look like?
So it really depends on the route, but every single conversation is just data collection. So we're literally just collecting information. For me on the Goosehead side, we can pull everything based on address. And so as we're going through, it's what we call the discovery call. We're literally discovering everything that we possibly can, depending on how many folks are going to be listed on the loan, husband, wife and husband, or spouse, and really just getting through everything: personal information, home address, driver's license. Make sure to always have your driver's license with you. And we'll really just collect everything. And then systematically, for me, I essentially just will input everything and then start running quotes. The auto insurance is a little different. We'll have, if there are any youthful drivers, depending on where they're driving, we'll have to require a little more information. But primarily just on the homeowner's insurance, it's very simple. With 4 pieces of information, we can generally collect even further just from public data sources. And so we can verify, just collect everything, gather a little of information on the property as well. But the moment I get a contract or someone goes under contract, I'm on Zillow, I'm pulling the assessor, like I'm pulling everything, and then really just verifying so that they feel a little at ease and knowing that I've gathered as much as I could on my end. We're just going to verify a lot of information. Sometimes the call can take about 5 to 10 minutes, depending on how much data they have available. And it'll be a pretty short discovery call.
So the quote is going to be specific to the house address, right?
Yes.
Perfect. So one of the questions I got recently from a first-time home buyer was, how does the lender estimate this when they're running the initial quote? And we're literally just honestly,
Yes.
like, the lender's just guesstimating
Yeah.
because we can't actually get a quote until we have an address. Until you say yes to the address, we can't get a quote until you know the home's address. And so, okay, so now we've had that 5 to 10 minute call. You're going to go behind the scenes and you're going to look up different scenarios, different options, because you're a broker. So you're going to go look at all the different options, and then you're going to give us a call back with information. And so what does that look like? Like, what are we actually comparing now?
Absolutely. So in some best case scenarios, if they've got everything ready to go on that initial call, we can get everything locked in one call. My system will allow me to pre-populate quotes live. And so as we're going through, maybe we're getting information on the auto, and simultaneously homeowner insurance quotes are starting to generate for me. And so if they've got that 30, 40 minutes to just wipe everything out, one call, we can have everything done. Otherwise, if let's say they're on a lunch break, they only have a little bit of time, and say, you know what, I get off at 5, bring me back. Cool. I'm going to present and get everything ready. And then we'll present at that time. And we'll start to go over coverages. I'm very much into the customization after education. So as soon as we go through our initial quote, I really am just going to start talking about the general idea of homeowners insurance, why the lender requires it, and then just some things that I wish were told to me when I first purchased my home. And so I remember what that felt like. I was in my early 20s, 23, when we bought our first house. And so it was a big deal. Now, when I get them on the phone, they're so excited, or they're really nervous and they're eager. And I'm like, okay, let's take a breath. Insurance could be a little crazy, but we're going to keep this a little fun. So just kind of bear with me, and let's start from the beginning and really just simplifying. So what does coverage A, B, C, D, E, and F mean? Because those are essentially the bones of every single homeowner's insurance policy. It's the endorsements and the deductibles that y'all get to customize and really decipher through to make fit, because every household is different, every income level is different. And even then, the history to each person is different. Auto insurance claims can impact homeowners insurance rates. And so we'll look at everything. Once we go through the coverages and explaining the coverages, now we start customizing. We look at the house, the age of the home, the deductible choices and how they differ, and then customizing even coverage beyond that, understanding what it means, looking at how custom the home is. Is it a more builder grade home? Are we doing something a little more custom built? Is it new construction? What type of roof? The roof, I love me a new roof. If you guys have a new roof and it says it on the Zillow, I'm happy. And so just all of those things, kind of walking them through the process so it feels easier. It doesn't feel so like early 2000s insurance office where you like come in and I'm not in a suit. I'm literally wearing this and we're on the phone, and it's going to be pretty easy for the most part. Very educational, very customized.
Awesome. So then what you mentioned deductible and endorsement. So
yes.
What is like a tip? Like if I was to call you and I needed the least amount of, I'm trying to qualify for this house,
yes.
and my payment, yes, our payment ratio is a little tight. What do you like? What does that look like when you increase the deductible, right? To lower the premium.
So just actually had this happen yesterday. We had, and it's pretty common. I feel like through the lending side and through the real estate side, all the scenarios are generally very repetitive. In this case, there was some overtime that was missed. And so things changed on the income level, debt to income changed. And it went from, I think it came down to 54%. And they're like, we need to decrease it to a specific monthly installment amount. So the lender said, we need to get this to 125, whatever. And I was like, okay, let's do it. Yeah, let's do it. Let me go in. Let me fidget with some numbers. Let me get the client on the phone, because it does essentially change the initial conversation. They're more educated though. And so they're having a more educated decision and saying, okay, well, initially an endorsement for water backup, for example, 10,000 coverage, 10,000 in coverage, I mean, with a deductible of 1,000, let's maybe increase the deductible to 2,500, let it match everything else. And that can bring the payment down $80 a year. And so we start to go through and just have those conversations. As long as the client's aware and they're knowing the changes that are happening, they really want to get that house. We want to get them in the house. And so We'll go through and make some adjustments. And then after the fact, for example, they're like, you know what, let's leave that. We ended up having more disposable cash. We're going to leave the deductibles the way that they are, and we're good to go. And so the endorsements and the deductibles can always be changed through the life of the policy, just like they could with an auto policy. And so they can't be removed because there's a loan on the house, obviously, but we have the ability to go in and essentially fidget with the numbers until we can get it just to where we need it to be without taking away from coverages A through F. All of the endorsements and the deductibles, we have room to fidget with.
Awesome. So now, as a first-time home buyer, I don't know what is A through F. What are those coverages that I have to have?
So coverage A is dwelling coverage. So coverage A is the estimated amount to reconstruct the home, and it's the limit of insurance that you have for your home, for the structure of your home. And so with most carriers, if you carry that 100% estimated value to reconstruct the home, that dwelling coverage amount, you also get an additional 20%, as high as 50% with some carriers. So that is the amount that the lender is going to want to see, because they're going to want to make sure if there's a fire 2 Wednesdays from today, that the insurance is going to cover up to the loan amount and the home can be rebuilt. And not sure what that looks like on the lending side, but they just want to make sure that the loan amount is going to be covered. Now, that can get a little finicky because sometimes the purchase price that you're seeing on your contract is going to differ from the dwelling reconstruction cost, because the insurance is worried about rebuilding and the cost of rebuilding the home. We're not having to repurchase the land value. If you live in Elkhorn, where the land value is like $90,000, it's a bit of a difference. And so sometimes our reconstruction amounts don't necessarily always match the loan amount. And so it can differ, especially depending on how much they're putting down. With most of our lenders and the lenders that I've always worked with, they'll take that extension, because it is a guaranteed dwelling extension, as coverage to coverage A. And so what that means is you'll have coverage A estimated, let's say it's a home for $250,000. And let's say your loan amount is $230,000. Our estimated replacement maybe says, well, this is going to cost $226,000 to rebuild. So that leaves a little bit of a gap between not only the purchase price, but also the loan amount. Now, let's say it's with a company like Nationwide. They offer 50% of guaranteed extension. Now we're looking at $226,000 times an additional 50%. So the loan amount truly ends up being way more than they're going to need, you know?
Yeah, that makes sense.
So the lender sometimes will say, hey, let's confirm. I know you guys have her covered at 226. Just send a deck page that says that it is an additional 50% guaranteed, and we are good to go. And so it confirms everything, because lets the buyer know if there is a loss, not only do you have access to the $226,000, you also have access to an additional 50% if the cost of building materials and all of those things, increase, and there's a need to essentially activate that. Now, coverage B is other structures. So coverage B will protect, or will cover everything that is essentially on your property, but not attached to your home. Fences, pools, a pergola, back porches. I mean, everything that is essentially on your property, sheds, detached garages, and things like that. You always have the option to change that. That is percentage based. And so it's generally 10% of the dwelling A coverage. So if you've got a home for $200,000, coverage B is essentially it's going to automatically initiate at that $20,000 amount. And you can always increase it. We've got some folks in our more rural parts that have very large sheds, like they have 2 or 3.
Their outbuildings are worth more than the house.
Yeah, they're huge, or they're ventilated. I mean, it's so nice in there. And so those are my rural properties. I'm like, okay, what do you all have back there? Okay, we're going to kick this up. Let's maybe do 50, 60, and we'll confirm by square footage. So that can always be customized. Coverage C is going to be personal property. And so when the best way, and this is an analogy I learned a long time ago, but basically take the roof off of your house, flip it upside down, and like shake everything out. So all of your personal contents, everything that belongs to you, your clothes, your shoes, your paintings, maybe not your plants, but like all of your furniture and like everything that essentially you use personally within your home, all of your personal items, furniture, and things like that. So if there ever is a fire, that's the limit that you have to all of the items that are going to be within your home. Those that have finished basements, I mean, sometimes you can do it based off of square footage, but I mean, if you've got 3 levels and every single room is loaded with furniture and TVs and things like that, that amount can be very significant. Um, let's go down. I'm so horrible because I'm always
That's
looking
okay.
at quotes and then I
This
never.
was good. I just wanted people to really understand like what the initial coverage was for. It's covering the house and the stuff in it. And then you can add to it for extra stuff that could
Oh,
happen.
always.
Yep.
Oh yeah, yeah, yeah.
Okay, so we have a few, so for obviously home prices have been increasing pretty drastically, which has been great for people who own homes because the appreciation is good and which is what
Yeah,
great
yeah.
for
I
first time
love
homebuyers to get
it.
into the market. But it's been a little bit tougher with home prices at the prices that they are. So we have a few clients that have been looking at things like townhouses and condos. So I just wanted to get kind of your feedback on how that impacts an insurance premium because the the payment is lower, and I'll go over how this all factors into the overall mortgage payment after this. But how does condo and townhouse insurance look?
So it's much, much less. So I actually just wrote a condo owner's policy yesterday for $632 a year, which was
Whoop.
much less in comparison to the $2,500 homeowner's policy that I had written just an hour prior to that. So it really varies on the what we'll always ask for or confirms that there's a master policy in place. So whenever you're purchasing a condo, the condo owners association will have their own master policy in place, and the buyer essentially is only going to insure wall in. So they're really only insuring everything within their walls that are confined within their own dwelling. When we're quoting, it's a much lower deductible. Deductibles average $500 versus the $1,000 to $2,500 that we'll see on a standard homeowner's policy. And then you'll have the ability to customize even dwelling coverage. You have the option to choose your personal property amount, as well as the dwelling or the structure amount based on the lender. So sometimes the lender will want to see it at the full loan amount, even at the full loan amount, which, for example, yesterday I had to write it at the full loan amount, which was $226,000. It was still only $600 a year, so it was much less in comparison to what it would be on a homeowner's policy. They're very quick to write, very easy, and then you still get that multi-line discount if you're quoting it with your auto insurance. And so still considered a home. It still includes endorsements like water backup coverage. It still carries all coverages A through F. So it's a very simple policy, but it's very significant and very inexpensive.
Awesome. That's I think when we're looking at like the homeowners or the HOA dues on some of the condos, sometimes people are like, oh my gosh, the policy is so, or the HOA dues seem so high. But then when you think about, if you were going to be paying $2,000 a year versus 600, adjusting what you're paying because your homeowners association is actually covering essentially like the building because of the policy that they have, and that's what
you
the
get all the cool
policy
stuff.
is. Yeah,
they get to build a lawn for you. Like it's just all kinds of cool stuff.
Yes. So it's good to like look at what the HOA covers and then compare the insurance costs on that unit. And so the final thing I just kind of wanted to explain to people is understanding how this all impacts their payment, their monthly payment. Because at the end of the day, when you're first time home buyer, usually you're almost always you're going to have a loan on the property, and so really understanding that the insurance ends up getting paid through your mortgage payment, but it's still separate in a sense. So I just kind of want to walk through that really quick. So you've got your principal and interest that your lender that's set, and that's set from when you close. Your interest rate is usually, if it's a fixed loan for 30 years, your payment, your principal and interest payment should stay the same the entire 30 years. Now there are different loan products that will allow for change, but we're talking about kind of the first time home buyer 30-year fixed here. So then after your principal and interest is accounted for, you've got your taxes and your insurance, and sometimes you have mortgage insurance. And mortgage insurance is a different thing that's done through the lender, not through somebody like Crystal. Crystal handles the actual homeowner's insurance policy that's protecting your home. And so that, if she just mentioned $2,000 a year, in theory, that gets divided out by 12 and you're paying it with your monthly payment. However, the lender is actually putting that in a savings account every month. So they're taking that little under $200 and they're putting it in a savings account. And then when Crystal sends a bill over, she sends the bill to the lender, right? And then they are going to pull the money out of the escrow account, the savings account that they have had for you. And so then they're going to actually mail a check to Crystal's company. Your insurance is going to get paid directly through the lender. And that's why you pay it in your monthly payments, but it's still technically separate. You'll see on your mortgage statement, you'll have a separate section for escrow account. And that's what's in the account for your taxes and insurance when they come due. So, and that's why when she's quoting you for the year, that's how it's impacting your monthly payment. Is if she was talking about, a $600 policy is going to be $50 a month on your mortgage statement, whereas $2,000 is going to be, whatever, a little under $200 per month. And so really understanding your insurance and the cost is important. And you can always change your insurance after. You can increase your insurance. Let's say you close and you're like, oh my gosh, you know what? We took off that endorsement, but I actually really want it. You can always call her right at, a week after closing and add that back in. So that's not a problem at all. I've seen a lot of people do that. So it's like,
it's very common. Yeah.
Yeah. So I think this was really, really good information.
Yeah.
Crystal, is there anything else you'd like to share? How do people get a hold of you? Should they want to work with you?
Yeah. So you guys, I have a link actually that I can share. Follow me on, if you have an Instagram, follow me on Instagram. It's goosehead_crystal. You can also call me. I prefer a call. Literally, my office is my cell phone. And so you guys can catch me anywhere at any time. I have a link that you guys can also use to actually start the quote and generate prices for yourself immediately through our digital agent. It's super cool, very schmancy. I love it.
Oh,
it makes everything so easy. And then I get to collect the data, and then we jump on a call, and then we're pretty much ready to start shopping. And so the only thing I recommend as you guys are shopping is to vibe out your agent. I will always say it could be just like my age, but if it's someone that you're really comfortable with, getting an understanding of your coverage is so necessary because losses do happen. Hailstorms just annihilate us. Yeah. Like I feel like every year right now. And so claims processes and communication and all of that, I think is so important. So if you have someone that you're very comfortable with and having an open line of communication to where it doesn't feel very transactional, do it. Have fun. Insurance is so boring and everybody does not like it. I don't like boring. It, but I like the process. It's so complicated. And so our job is to make everything as simple as possible. And so if it's something that you need to have more questions on, ask away. Have the best time doing it because once you're done with real estate and the lending side, the agent essentially kind of takes the wheel, and we are who you get to really have the majority of the contact with moving forward. Every renewal, every annual it's us. Yep. We're friends now. I'm the captain now. Yeah. And so it changes. And so it's I always recommend to just have a good time and have that really good relationship with your agent and shop. Definitely always shop. As a broker, I have 37 companies that we quote with. And so we're always looking at everything, in a wider scale. Unfortunately, rates are increasing annually for us. It's inevitable. It's scary. My own insurance
for everybody, for all insurance agents.
For everybody, every single person on this planet is feeling the weight of it. And so just hang tight, understand the things that, give you the discounts, which I'll share. I actually just shared something too. Different things that you can use to help mitigate the cost of the insurance. All kinds of cool things to help bring that down. So yeah.
Yeah. Ooh, I think we have a follow-up call then.
Yes. We do.
We'll do a follow-up call. We'll talk through some of those. Awesome. Thanks, Crystal.
Yeah, thanks for having
me. And I'll make sure to post all your tags on the comments so that people can get in touch with you.
Awesome. All righty. Bye, everybody.
Bye.
And to you first-time home buyers, congratulations. It's the best thing.
Yes.
Literally the best thing.
It's a big deal.